What's up, guys? Today I'm going to share 5 strategies that anyone can use to make $100 per day in the stock market. But before we get started, I want to set the scene. Imagine that you're in Honolulu, it's 4:30 in the morning, the sun hasn't risen yet, and you're on your balcony overlooking Diamond Head, a mountain that is now a crater. You've got your stock charts on your laptop and a piping hot cone of coffee right next to you with the ocean in the background. You've planned out your trades the evening before, and as the market opens, you just wait for price action to hit your buy-in point and you enter your position. Just as the sun is rising, you've hit your price target and you exit your trade for $1,000 of profit. Your girlfriend is just then waking up and wants macadamia nut pancakes from Eggs and Things. You now have the entire day to spend however you'd like, just because you made double the money in just over an hour of trading than you did in one day at your 9-to-5 job back on the mainland. Today, I'm going to give you that option by showing you how to make $100 consistently from the markets. Eventually, you'll make your way up to several hundred or even several $1,000s per day. First, I'll share my risk management strategies, then I'll talk about the kind of stocks you should be investing in. I'll also be talking about the mindset you need, chart indicators, and the number of stocks you should be trading. Before we get started, please hit that like button and don't forget to subscribe to the channel if you haven't already. Also, I post time-sensitive content such as market updates and top stock picks, so be sure to turn on your notification bell so that you won't miss any of these videos. So without further ado, let me teach you how to make $100 per day. So the first strategy is risk management. I want you to ask yourself if you are someone that struggles with taking losses. I know that is not the sexiest thing to start off talking about, but it is the most important. Not learning how to effectively manage your risk will cause you to lose all of your hard-earned money. 3 of the biggest mistakes that beginner traders make is being too emotional about the stock they are trading, not recognizing chart patterns that go against their position, and being too greedy and not taking profits off the table when they see them. So the first way that we can manage our risk is to set a stop loss right below your buy-in point. This buy-in point is at a significant level of support, and the first criteria you have to meet is that you first need to find the trend of the stock. Then you need for the price action to hit a level of support before buying. So let's say your stock is on an uptrend. We'll be looking to buy it when it retraces to a significant support level. The opposite is true of a downtrend, where we'll be looking to sell or short a stock when it hits a resistance level. This is important when setting a stop loss because you're buying at a significant level, and a break of that level can signal that you need to exit your position. The smaller your stop loss, whether it be a percentage or a dollar amount, the less money you will lose. Next, you need to make sure that your profit to loss ratio is at least 1 to 3. That means for every dollar that you risk losing, there's a potential to make 3. So to give you guys a visual representation of this, I want to show you a trade that I took on Netflix on August 12th of this past year. Looking here at the daily chart, we saw that price action fell to the 200 EMA. This is a strong level of support, especially on the daily chart. When price action fell to the 200 EMA, I bought calls with a stop loss of a close of the candle on the daily chart below the 200 EMA or a $5 fall below. However, my next level of resistance was at 523, so essentially I risked $5 to make $15. The last strategy that I have to effectively manage your risk is to take profits off the table as the stock moves up in price. In the previous example with Netflix, I bought these option contracts, and once I got 20% of my contracts, I sold one just in case this was a false breakout and price action went back to the 200 EMA. As the price of the stock continued to increase, I sold my second contract, then sold my last contract for an 80% gain when price hit my resistance level at $523. So to summarize, the most important ways to manage your risk is to set stop losses right below your buy-in point, only enter a position where your profit to loss ratio is at least 1 to 3, and take profits off the table as the price of the stock moves in the direction that you anticipated. Next, I'll cover the price of the stock that you should be trading. My recommendation is to find cheaper stocks under $200 when you are just starting off trading. Now, the reason why is because these stocks typically move slower, and while this may limit you from achieving quick profits most of the time, it will also prevent you from losing your money quickly, especially if you are just starting out. When playing option contracts, one thing to look at is the delta, and this will tell you the amount that the option contract will either gain or lose in value based on every dollar that the stock moves. So when playing more expensive stocks like Google that moves $50 a day, there is a lot of risk involved. I recommend playing stocks like AMD or Uber that are cheaper stocks that may only move $1 to $2 per day, but that are much safer. As you start to trade these cheaper stocks, you'll learn more about how each of these stocks moves, and you'll be better at predicting where price action will go from there. Eventually, you'll be able to move on to more expensive stocks like Tesla that can move $10 to $20 in a matter of minutes, and these are the kind of stocks that can net you a few $1,000s in the morning and replace your 9-to-5 job since you just made your monthly salary in a matter of minutes. So the title of this video is how to make $100 per day, but one of the key aspects of trading psychology is to not feel like you have to trade until you get $100 from the market every day. Instead, averaging wins is one of the most important things earnings when it comes to trading. Some days you might make $1,000, other days you might only make $20, and then occasionally you'll lose $50. You don't want to overtrade just so that you can hit that $100 minimum every day, because to be honest, the market won't give you a set amount every day. Sometimes volatility might be too high, other times none of your stocks in your watch list will be set up to even enter a low risk trade. My next piece of advice is to stick to basic support and resistance levels and common chart patterns. If you haven't watched my videos on support and resistance and common chart patterns, I've linked them up above. Make sure to watch these several times though until you really understand how to use these in your charts. These levels of support and resistance and chart patterns are the language of the markets, and you have to master these in order to trade, because I guarantee you that if traders on Wall Street don't use algorithms already, then they're really good at recognizing chart patterns and playing off of support and resistance quickly. Plain and simple, you won't make it as a trader unless you dedicate time to learn how to use charts, so make sure to set aside time to study this. My last strategy is to limit the number of stocks on your watch list to 5. When you're just getting started, it is important to keep things simple and stay focused. Imagine going to a store where you had to pick from 100 different brands of TVs. It would make the choice that much harder, especially if you were looking at purchasing the best TV that gave you the most bang for your buck. Now you might be browsing through Instagram and see people talking about 10 different stocks. Well, just pick your top 5, preferably stocks under $200, and chart them. A much shorter watch list will help you to be less distracted and more focused on the nuances of each stock. As you spend time studying each stock, you will start to notice patterns. For example, some stocks that I've traded recently respect the 50 EMA on the daily chart, while others only respect the 5 and show no affinity for the 50. Since trading is all about using your edge, make sure that you know your stock charts like the back of your hand. If you can tell me where your significant levels of support and resistance are on the daily chart of one of the stocks that you are trading, then you're on the right path to making at least $100 per day. So if you were helped by this video, don't forget to share it with others, and especially those that are looking to supplement and eventually replace their 9-to-5 job with trading. The stock market is one of those unique opportunities where you can take profits from anywhere in the world as long as you are disciplined, know your charting, and have an internet connection. On this channel, my goal is to break down investing and trading and make it so easy for anyone to learn. Let me know down in the comments below what additional topics you'd like me to cover. Anyways, I had an awesome session with you all today, and I can't wait to see you guys next week. Peace.